Hi, I'm Stephanie with Next Home All Islands, and
I am Tim with Next Home All Islands as well.
and today we're here to talk about VA Assumable Loans. Tim has been spending a lot of time every single day looking up VA Assumable Loans, sending out VA Assumable Loan information to our clients and customers. So just wanted to sit down and have a conversation about why is this so important to you?
Being a veteran, VA loans are a big benefit. Yeah, I guess so. It's a big benefit. And being out here in Oahu, there are 9 bases centrally located here on Oahu, 11 bases total in Hawaii. So there's a big veteran preference out there. Big veteran, what's the word? Community. So we deal a lot with VA loans. And right now, it is definitely a buyer's market. And in my eyes, I don't know if you feel different, but I definitely say it's a buyer's market because you're buying under appraised value and you're able to get credits and concessions and all that. But also you have a lot of buyers in today's market, or they want to wait for the interest rates. This is both worlds. So you get to buy it in a buyer's market and you get to assume it with a lower interest rate. So that's what I'm trying to push out is the benefits, the hidden value behind VA assumptions, basically.
So VA assumptions, I feel like you're putting this information out there. It's really good, useful information for veterans and for non-veterans. But let's actually step back for a minute. Let's talk about what are VA assumable loans? What are assumable loans in general? Because having an understanding of that foundation will then help people understand, is this useful information for them?
Right. So all VA loans are assumable. The lender put in the regulations as to what they allow as far as assumable goes, but all VA loans are assumable. Any veteran or non-veteran can assume a VA loan.
Let's pause right there.
Yep.
And I know you're going to get into explaining that, but I want to emphasize that. Because any veteran or non-veteran who's qualified by the lender can actually assume a VA. I just wanted to emphasize that point.
So if it's a veteran to a veteran, if a veteran seller has a VA loan and they're selling their property and another veteran buyer comes in and wants to assume that mortgage at that low interest rate, whatever, let's say it's 2%, just to make round numbers. They want to assume it at 2%, they would have to come in and qualify at that mortgage price with their income. The buyer's income would have to qualify for the VA assumable mortgage with the current lender that it sits with. And if that happens and they get qualified and they're approved, then the two veterans will swap their VA entitlements. So the seller gets to walk away with their VA entitlement and go purchase something else, somewhere else. And the buyer gets to use their VA entitlement to assume that mortgage. Now, if you do it the opposite way, where it's a veteran selling and a non-veteran assuming, which is doable, the seller would have to give up their VA entitlement. And sometimes that can be for a time period, or sometimes it's going to be for the life of the loan. But we're seeing more and more of the VA sellers willing to give up their VA entitlement for a civilian to assume the VA loan at a low interest rate.
So Tim and I are both veterans, so we won't use us exactly as examples, but if I own a home and I have a VA loan on my home and I want to sell my home and I have a loan that might be attractive at the current terms, maybe it's a 2%, maybe it's even a 4.5% interest rate, that might be very attractive compared to today's rates. I can market my home when I'm selling it with a VA assumable loan. A veteran like Tim can come in and purchase my home. And if he has his VA entitlement available, not used up somewhere else, and he purchases my home, takes over those mortgage terms and is approved by the mortgage lender, the entitlement is now his entitlement tied up with that mortgage and that home, and I get mine back. I can purchase with it somewhere else. Or maybe Tim doesn't want my home, but someone else who's not a veteran does want my home. I can still offer my VA loan. I can market it to them. Mm-hmm. And I could choose to sell my home to that person, assuming my loan, if they're approved by the lender, but I don't get my VA entitlement back. Maybe I'm going to move in with family. I don't need that. Maybe I already have purchased my other home. I don't need that.
Maybe you have a spouse that has a VA entitlement.
Yeah, maybe
so you don't need two. You just need one. You only need one.
Good point. Maybe I have a spouse, exactly, with a VA entitlement. Oh, I may not need mine back. Great marketing tool for me as a seller to market it, VA assumable loan for veterans and non-veterans. Mm-hmm. Really great marketing tool. Low interest rate, great terms. A civilian could come in and purchase my home, approved by the lender.
Huge savings throughout the life of the loan, hundreds and hundreds of thousands in our market. But yeah.
So what happens, let's say I bought my home 10 years ago. Maybe I bought it for $600,000 and now it's worth $1 million. Pat on my back.
If you bought it for $600,000.
Maybe my balance is $600,000. Yeah, we'll just go with your numbers. Yep.
So the balance of the mortgage is $600,000, selling it, or it's worth $1 million. So you have a $400,000 gap. And that $400,000 gap can be made up with cash, which, not a lot of people have a lot of cash to make up that type of difference. Or it could be made up in terms of a second mortgage, like a HELOC or home equity line. So you can go out and qualify for a HELOC Now you're going to have to qualify for the HELOC and the assumed mortgage, but you're still going to save. I mean, you're going to save. HELOCs, you're only paying interest only on most of them. You're paying interest only, so your costs are going to be down as far as your expenses per month, your monthly payments. And then if you're assuming the mortgage at a 2 or 3% or even 4%, you're going to be saving on that as well. So you can make up the difference of the gap, either cash or a second mortgage of some type.
And I see you sit in the office and look up every single morning, spend like an hour looking up the VA symbols, pushing them out to people. Do you see that most of them do have that large gap, like $100,000 or more gap, and I have to go get a loan to be able to,
no,
or a HELOC to purchase that?
There's a lot that you can just step into it for $0 or $5,000 or $4,000 gap. There's one that's out there right now that's a negative $9,000, so they're selling it below what the balance is, which means they have to come to the table in order to make up that difference. But they're selling below, so there's quite a few that are, I would say, 20%. There's about 86 VA assumables that realtors are marketing as VA assumables. So there's more out there, but there's 86 that are on the market that are advertised as VA assumables, and about 20% of those, 30,000 or less as far as the gap goes.
So on Oahu specifically, right now, active listings, there's 86 that listing agents are marketing as VA symbols. So there's some others that some sellers don't know this is a great marketing tool. Some agents don't use it as a marketing tool. There are some others that may exist, but there are 86, and about 20% of them have a gap of $30,000 or less.
You can make up the difference of $30,000 either cash, a HELOC, or just coming down on purchase price, offering less. Come down $15,000. Now your gap is only $15,000. So there's 3 ways, I guess, you could come down on that difference. There's no down payment. There's no VA entitlement fee. And the other thing is that you do not have to buy it as a primary, because the veteran who got the VA loan in the first place has already satisfied that first 10 months of making it their primary residence. So an investor, if they're offering it to non-veterans, civilian investor, let's say, could come in and assume that mortgage, and let's say the gap is $5,000 for $5,000, and they could rent it out. They don't even have to live in the property.
Glad you bring that up, because I have a VA loan that I'm not using right now. So I could, and I haven't used it because I own a home.
Right.
Yeah, we both do. I own a home without a VA loan. It just didn't make sense for me at the time to use my VA loan. I actually bought it as an investment. That's why. But long story short, I have a VA entitlement fully available. I haven't thought of using it because I don't want to move from where I'm living. So I thought I had to be primary residence to use it. But from what you're saying, I should be looking at the VA assumable properties out there that have these interest rates lower than what I could get in the market today. And I can offer my entitlement to give the veteran their entitlement back.
So you can walk away with it.
I could
use it somewhere else.
No down payment, just close that gap. No VA entitlement fee, because I'm just assuming a loan. There's some closing costs, of course. There's always closing costs with escrow and with the mortgage company, but less than if you're taking out a new loan.
Right.
That's great. So
There's
you can
lots of benefits. There's lots of benefits.
How come we don't hear more about this? How come agents aren't marketing it more, pushing it more? I don't see agents like you out there searching for these and really presenting it to buyers as you should be looking at this. Civilian, veteran, or not, or whatever, all people should be looking at this.
It's a great question. I think maybe the VA assumption has got a negative stigma to it from when it first started being popular, like maybe about a year ago, 6 months ago, when people first started inquiring and assuming mortgages. The lenders were not equipped in doing VA assumables. In fact, a lot of them didn't even know that they could, that the VA loans were assumable. They were saying, no, you can only assume it if it's a death or a divorce. And then later find out that's not true.
In our own office, without using names, we had a specific lender that said, no, only in the case of death or divorce can that VA loan be assumed. The exact same lender with different property, about 6 months or a year later, we did a VA assumable.
Exactly.
Or VA assumption.
Because there's actually a clause that lenders have to honor the VA assumable when they do a VA loan. And if they don't, then the VA will step in, and then that lender will be put on the blacklist, and they won't do any more VA loans. So they will honor it. It's just that a lot of people didn't take advantage of it, and therefore the lenders didn't know about it, and they were turning down, no, it's not VA assumable. Plus, they didn't have the manpower in the VA assumable department because nobody was doing it. And so VA assumables in the beginning, a year ago, were taking 90 days to 120 days to close, sometimes 6 months. But now I think the lenders have kind of caught on that A, they have to do it or they're going to lose the VA loans, and B, there's money for it. for them in it. Like they still get closing costs, they still make money off of it. So I feel like they have put the manpower back into that department because they're not doing a lot of loans, they're not originating a lot of loans at 6.5% in today's market. So they're putting the manpower to do the assumable process.
I mean, speaking to that, again, in our own office, another VA assumption that we did, representative from the lender that my buyers were working directly with, was actually training a new set of folks on lender to learn how to do VA assumptions. So speaking to that point, the lenders realized they have to put more manpower to it. So we were fortunate that one actually closed in less than 45 days because the person who was training everyone else to do it was the one running it. But they were training a bunch more people to learn how to do this.
Right. Yeah, I think we had one over in town that the two owners were military and active military. And I think that one took 90 days to assume, and they were deploying back, like leaving country. So that was not too bad, 90 days with them deploying, but now they're doing 45. I even heard, one sooner than 45. So that's a regular closing.
Yeah, absolutely. There are other lenders I've worked with that have trouble. I'm going to leave names out of this. I'm not going to give any examples to make those timelines. But I think there are myths that they're hard to do. Not every lender will do them, that they take too long. And the experiences of the past, maybe they weren't so much myths. Like those were kind of the reality of the experiences of the past. But the truth is, they aren't taking as long. They're not, I don't know if they're harder to do, but it's not originating a new mortgage. I would think it's not harder to do. It's just qualifying a new buyer for that same mortgage. It does take a little bit of effort from the agents. You have to have agents like you, like us, who are willing to put that effort in of make the phone calls, stay on top of it. So it does take a little bit more effort. But
reaching out to the agents, finding out, because not every agent that says it's a VA assumable, some just say VA assumable, but they don't tell you what the gap is. They don't tell you what the monthly payment is. They don't tell you what the interest rate is. So you have to call, you have to find out. And that's what I'm doing, is calling, finding out, making a list, putting it together, putting it out on Facebook and trying to, and you asked me, why is this important? A, yes, I'm a veteran, but also B, the stigma behind VA assumptions is probably more the reason. The stigma behind VA loans in general. Like when I first got into the business in the early 2001, if you had a VA loan, an offer from a VA buyer with a VA loan, it was looked as a great offer because their income is steady, not a lot of changes. Whereas if you have a civilian, they could lose their job, they could get, decrease in pay, other things that happen. So it was a strong offer if it came in as a VA loan. Nowadays, it seems to have a negative impact if it's a VA loan. If you're doing a 100% financing versus, a 20% down payment, they will go, a lot of sellers and a lot of agents think that the down payment is more attractive than the 100% financing. And that could be for multiple reasons, but that doesn't necessarily mean, I think we're kind of getting off topic as far as the assumptions go, but it doesn't necessarily mean that the offer with 100% financing, the VA offer, doesn't have 20% sitting in the bank. It just means that he might have 20% sitting in the bank somewhere, but is gaining 10% interest. So why would he take that out to put as a down payment and, save 6.5%? He's making more money elsewhere. And we have that. So really, there's that stigma as far as a weaker offer just because they have less down payment. There's also a stigma behind the appraisals. The appraisals, some realtors will say the appraisals tend to come in conservative, and then the VA assumptions. So right now I'm just trying to push the VA assumptions and trying to educate, buyers and sellers
and other agents
that this is a good thing. Like this is, everybody's like, oh, we need our interest rates to come down to help stimulate the economy. Well, they are down. If you look at the VA loans, and all VA loans are assumable. I mean, how many VA loans are there in the US? Like, those are low interest rates, and you can assume them over and over again. It's not just one assumption. It's assume it. Like, and it's not a markup in value. Like you can have house A with a conventional mortgage selling for $500,000, and house B right next to the same exact floor plan with a VA loan selling for $500,000, but with a 2.5% interest rate. That's a huge value. That you're going to buy that property with a 2.5% interest rate versus looking at 6.5 on the other one, the next door neighbor.
Because your monthly payments are way different.
But the appraiser can come out and appraise the property and say, oh, the house is worth, the $200,000 that you're going to save over the course of the mortgage. So it's a hidden value. It is a
hidden value. I still like that title.
You still like that?
I do. Not only are VA loans assumable, in fact, all government loans are assumable.
USDA.
There are more VA government loans out there than USDA or FHA loans. I mean, I haven't actually looked up that number, so I don't know that as fact, but I would think that there's a lot more VA loans out there than USDA and FHA. But all government loans are assumable. So maybe there's a property, if we're working with buyers, maybe there's a buyer who's looking at a property that currently has a USDA or FHA loan on it. It's still something to investigate and discover. When did they take out the loan? Is it a good interest rate? And could that be assumed? I don't know as many details about those, and I think most people don't. But
Yeah, I'm not too familiar with it. I just know that they are assumable. I don't think we've even done one.
no, not FHA and FHA.
But they are assumable. But I think that the biggest thing is like whether buyers use our services or not, they just need to ask the realtor, like if they're interested in the property, number one, does it have a VA loan on it? It may not even be advertised as a VA assumable.
Mm-hmm.
Does it have a VA loan on it? If so, is the seller willing to give up their VA entitlement to allow you to assume it? Because it could save you tens of thousands, hundreds of thousands of dollars over the life of the mortgage.
Does it have a VA loan? What are the terms of that loan? Maybe it doesn't have a VA loan. They took it out 2 years ago, and they're still at the 7% rate. But
Right.
does it have a VA loan? What are the terms of that loan?
Right. And just educating that it's not a hard process. I know there's a lot of agents out there that think that it's a hard process. It's not that hard. As long as you stay on top of it, it's not. I think it kind of gets thrown in somehow into the mix of like a short sale. If you're doing a short sale, the process of dealing with the lender, it's a 6-month process usually. That whole 9 yards, but it's not that way. Not nowadays.
So if people want to learn more about this, have questions about VA assumable loans, want to see the VA assumable advertised listings that you're putting out there, how can they find you? How can they get these answers?
Start a Facebook group, VA Homes-Hawaii, and then also VA Assumptions. And you can ask to join to be a member of that. And I post content out there. I try and do it daily, maybe every other day, but daily I put new listings that come on the market. There's actually one that just came on the market that is a legal short-term rental in Waikiki for $248,000, and it's VA
Is it VA assumption or assumable loan?
Mm-hmm.
Do you remember any of the terms, like interest rate or when they took out the loan or anything?
They're gonna have to call us.
Yeah. Yeah. Yes.
Well, you go through all that. And that's the thing, is like being a realtor is like you want to give all the free information as well and help, but at the same time you also want to put food on your table, and
they're gonna have to call to find out before I ask you.
I've already sent it to 5 buyers.
I'll have to look though. $248,000 is the asking price. Studio?
Yeah.
1-bedroom studio? Studio.
Yeah, studio.
Mm-hmm.
But not bad.
Yeah, short-term rental.
That's what everybody looks for nowadays. Yeah, so if you want, you can go out to VA Homes-Hawaii or VA Assumptions, or you can give us a call. You can give us a call. You can call my cell, 808-489-0054, or you can call Steph's cell.
808-783-0163.
Or you can email timcells@gmail.com.
Awesome. Well, thanks, Tim, for sharing all your knowledge, or at least a smidge of it, on VA Assumptions. Sweet. Look forward to the next one.
Thank you.